Hello, and welcome to our maiden edition of Money Moves for SME. My name is Uncle Charlie. I know people know me as Inkuntebo, others know me as Charles Mensah. But for this program, preference is given to Uncle Charlie. And in the next 6 minutes, I will be diving into financial essentials for SME owner managers. I mean, most people are managing their own businesses, and I call them owner managers. And that's what this podcast is focused on. Today, what's on my plate? Most small and medium-sized businesses struggle not because they don't have a product or service they are selling, but because the financial management is weak. From poor cash flow to blaring personal finances. It's difficult for them to separate finances relating to their person and that of the business. And sometimes before they realize it's too late. I recall a client who operates in Kaswa, thereabout, I can't remember, but I recall it way back. He says, Uncle Charlie, I make profit on paper. But when I check the numbers, all my credits and things that I've been selling on credit is locked up in receivables. So yes, on paper, I make money, but in reality, I don't see things there. What is the cause? And I recall I took it through few things. But then first thing that I want to bring home to you is that first and foremost, you must understand your numbers. The flow between the profitability of the business, sometimes they call it gross margin, which is your sales. Others will call it revenue, and the expenses that you incur in getting that sale. If it's a product, they say cost of sales. If it's a service, cost of service. Once you knock it up against that particular sale that you did, what you get is what we accountants and managers sometimes term it as profit. But you know what? Profit doesn't realize itself until that particular person who bought the items have paid for it. And because the business is a continuous, there will be times that they will pay for it, there will be times that they will delay in paying. So your profit may not be necessarily in the bank account, but necessarily will be in your account receivables. That is those who owe you. So you must have full control on your numbers. So first thing, know your numbers, know what is yours, know what is for others, and know where the profit is realized in the form of cash. That's one. The second point is that let's learn how to separate our business expenses from our personal expenses. Yes, I know the business is yours, but you see, if you attempt to run as if it is yours and therefore you and the business are one, bro, you won't go far. So we must learn to separate the business that you do from the person. They are two separate people. One is artificial, one is natural. So separate them. Do separate them, I beg you. How do you separate them? You can separate them by either bank account. So there's one account that is strictly for the business, and there's the one that is for your person. You may save from the same bank or separate banks, but as long as you are separating the activities. When it comes into expenses that you are likely to incur, never mix the expenses for the household with the business expenses. Why am I preaching this? Because it becomes very difficult. You don't know whether the business is costing you to make losses or you personally, you are increasing your expenses into the business, and that's why you are not making profit. So let's separate them. Okay. Look, like I was saying, I've talked about separating the two. The next most important point is keeping records of the things. And if indeed you are not seriously computer savvy, where you can use your Excel sheets, then you can go by my theory in the past, which is red pen and blue pen. So get a notebook and use the blue pen to write all the monies that are coming into the business, the sales, the things. Use the blue pen. And then use the red pen to equally write all the monies that you intend to go out or are going out. Always keep an eye on the red, because you should have control over the red. So the expenses that are going out as against the monies that are coming in. These two things that you must keep an eye. If you're very savvy, then you can use some accounting software or Excel sheet to start with. So you are using, as a tip, you are using that to track. And pictorially, you would see whether you are doing well or not. It depends on the quantum of the red pen and the amount involved. So when you see more red, as the name red implies, it means that you are likely to be in trouble. So the focus is to have more blue, which is money coming in, and then red, which is money going out. Don't waste too much time on the definitions of credit, debit. Sometimes it becomes very confusing. So red, blue. Red is going out, blue is coming in. So you hesitate those numbers that are going out, and you expedite those monies that are coming in. And I'm sure that it would bring you some track of things. So the key takeaway for today is basically make sure that you have control of your numbers. You separate your business expenses or business activity from your personal activity. And then also you can use some tools like Excel sheet or the red and the blue pen to track it. If you can remember these three things, then your books are clean. It will help you to make sure that you stay ahead of the business. Thanks for joining me on this episode of Money Moves for SMEs. If this really helped you, then share with other business owners and make sure that they all believe in it, because financial literacy these days is not a luxury. It is a survivor. Once you understand it, till next time, keep building wisely.